to market on close. It's time for Options Corner. We'll welcome in Rick Ducat, our lead market technician here on the Schwab Network. And Rick, today we're looking at Trade Desk after news that they'll be added to the S&P 500. You know, what levels are you specifically watching? I'm looking at them right now, currently trading on the NASDAQ, and they're up about 7.75%. So certainly a positive response to this news.
Yeah, for sure. And, for starters, just there's many reasons why getting included in the S&P 500 is a big deal. Obvious factors like greater investing inflows from large institutions, greater liquidity and volume, more activity in general, et cetera. But, for those of you who don't know, the Trade Desk is an advertising company. The whole point of advertising is raise awareness with people who don't know, remind people who do know that whatever you're talking about exists, and ultimately to influence behavior. And it's kind of an interesting parallel between this company and the other intangible benefits, big boost of publicity, a greater sense of name recognition, even a sense of prestige, perhaps, from being included in such a major index here. But, if we were to look more closely at a sector comparison, this would be part of the communications sector. And it's kind of a tricky group here. There's only 22 names in the S&P 500 that are communications. It's a kind of a smaller group. Two of them are the Mag 7, though, Alphabet and Meta Platforms here, but it's also telecoms like T-Mobile, AT&T, Charter, streaming entertainment, Netflix, Disney, etc. And then, advertising is kind of at the bottom of the pack here. So perhaps it's a bit of a tough road here. You can see the Trade Desk is down with the other two advertising names, one of which is actually buying the other anyway, too. But if we were to look at our next chart here, a quick glance at our communications sector chart, actually a pretty interesting setup. We can see price has pushed above that green line there, 105. We held on after a short pullback here. We established a volume node near 107. Now, price bounced off of our trend line and that 21-day exponential moving average. So, preparing for perhaps another retest of those highs.
And Rick, as I look at this chart that you're showing, I know your highlighted portion normally, but I see that second highlighted portion just above. What is that second highlighted portion that you have there around that 107.50 mark?
Yes. So what that's trying to show is we have our volume profile study on the right side of the screen, that blue bar graph here. And what that shows you is the levels at which the most trading took place here. So when you see a big spike on that blue bar graph, it suggests that it was an important price level where a lot of shares were changing hands, a lot of activity going on. So you can see the bigger one is near the 102 level, kind of a broader range. And then there's another smaller one near that 107 level, as you mentioned here. So the point is that would be a key area to push through for prices for this one.
And as far as the stock chart, as we look at the Trade Desk year to date, they're down more than 30%. Once companies join the S&P, generally they do see a boost, as investment portfolios start to reorganize their portfolios based on who's in the S&P. But how are things looking for them as you look at their historical patterns?
Well, for this particular stock, a bit of a rougher road recently, but you could say that about many stocks. Like many others, we bottomed out in April around the tariff news announcement here. From there, we have rallied. We are up about 89%, a substantial rally, but still quite down notably year to date, as you said, 31% or so. And, we have had a big push upward. You can see strong volume happen today. RSI breaking through, approaching the overbought area. But now you can see our red line there near 85. That represents the high point after we had our earnings gap down from early in the year. So we haven't really managed to take out that old level, let alone fill that big gap that happened here. So that level near 85 also, which is the 252 exponential moving average, further resistance, 85 would be really important to clear. Then, as we talked about earlier, another volume node just below near about 75.
And as we look at the options activity on this, on the Trade Desk for today, what were you seeing?
Yeah, heavy volume today, about 158,000 options contracts. 70% were calls, so a skew toward that side. A lot of the activity is in from now to August, 78 to 100 for the calls. Also big activity in the 85 calls for July 18th. Puts much more concentrated, about 80 to 82 in terms of open interest. July is the highest open interest. So that this Friday's monthly expiration here, 123,000 total open interest, 61% calls. If we look at our next chart too, you can see in this case, our shaded area on this chart represents the expected move for July. So from about 76 to 90 plus minus 8% in only a few days here. You can see our green lines, 60 to 140 is the general range. That dark green line, 85, that's the highest open interest. Our next chart, we look at the put side here. So on the put side, it was more like 50 to 75 was the overall range, while 70 was the highest level of open interest for this one.
And any trades that stuck out to you, Rick?
In terms of trades, heavy buying in the January 16th, 82.5 strike calls, about $1 million, $945,000 debit for basically at the money calls, long dated. Not clear if it was an opening or closing trade, though.
Well, a big day for the trade desk. Rick, thank you for taking a look at their technicals for us. That's Rick Ducat, our lead market technician here on the Schwab Network.